$5,000 in debt, 50 to 60 hours a week on the job, $700 a month for health insurance, going straight onto a credit card just to stay covered. At 31 years old, working in New York, this person has quietly stopped caring about paying any of it off. And the argument they make is genuinely hard to dismiss. Profiteer Eric here. Welcome back to Real Money Stories. Today's episode comes from the Poverty Finance subreddit, and it's one of the more emotionally honest posts I've seen in a long time. This one comes from the Poverty Finance subreddit. Let me read it to you in their own words. I simply feel like my future is doomed, and as long as my credit score is still good, I don't really care about paying off my debt or getting into more debt. I care more about having actual savings for the sake of needed to move or something. I feel crazy and irresponsible for not caring about my debt. I have no next of kin or anyone who'd be responsible for my debt. I'm 31 and I feel like my life is practically half over and I'd rather just enjoy life while I can. My backup plan is just filing for bankruptcy and living with my parents. I just don't care. I work 50 to 60 hours a week and make good money, but I live in New York, so it doesn't matter. I think by the time I can retire, if I even can, society will be so far gone the dollar is worth nothing anyways. So I don't contribute to a 401k either. If I'm just depressed or burned out, or if it's just a valid fact, but everything seems doomed in this country and the hope for a better life and future is out of reach. Additional context, my debt is $35,000, but my credit score is 700 because I always pay on time and my utilization isn't too bad. I also can't afford my health insurance and use a credit card to pay the premium, and I tried to pay that one off as much as possible, but it's literally the only way I can afford health insurance. It's $700, so my debt's only gonna just grow. I'd honestly be better off unemployed, which is just sad. I love my job, but if I ever got fired, I'd get free insurance and make almost just as much on unemployment. I work my ass off and I make too much for any state or government assistance. I just can't cope with how unfair the system is, so why the would I pay anything back? I pay the bare minimum. Okay, first thing I want to say, reading the original poster is not crazy. Not even close. What they're describing has a name. Researchers and financial writers started calling it financial nihilism, and it spread fast after 2023 because it resonates with a massive chunk of working Americans in their 20s and 30s. It's not a personality flaw, it's a response. I've been writing about personal finance for over a decade, and the pattern I keep seeing in posts like this one is that the person writing it isn't reckless. They're exhausted. There's a real difference between not caring because you're irresponsible and not caring because the math genuinely doesn't seem to pencil out in your favor. The original poster is clearly in the second camp. The health insurance piece alone, $700 a month on a credit card just to stay insured while working 50 or 60 hours a week. That's not a personal failure. That's a gap in the system. When losing your job would actually improve your financial health because you'd qualify for subsidized coverage, something is broken. Not with you, with the structure. There are options worth knowing about. The original poster's income ever fluctuates, or if they have a qualifying life event, the ACA marketplace is worth revisiting. Income-based subsidies can bring a $700 monthly premium down dramatically, depending on the plan tier and the income level. Healthcare. Gov has a subsidy calculator. Takes about 10 minutes. It's worth running every fall during open enrollment because the thresholds shift year to year. Single variable, the insurance cost could change the entire picture. Now, here's what I'd actually focus on if I were reading this situation. Savings instinct the original poster describes is correct. They say they care more about having actual savings for something like a move. That's not irresponsible. That's the emergency fund first rule in action, and most financial planners put it ahead of aggressive debt payoff for exactly this reason. 3 months of living expenses in a liquid account accessible before you throw extra money at debt. If you pay down balances hard and then an emergency hits with nothing in savings, you end up right back on a credit card. Original poster is already wired for this. Instinct is sound. One small upgrade worth making a high yield savings account instead of a standard bank account. Online banks are currently paying somewhere around 4% annually. On a $5,000 emergency fund, that's $200 a year doing nothing but sitting. It won't change a life overnight, but it's meaningfully better than the national average savings rate, which is still well under 1% at most big banks. Now, up to this point, everything the original poster is doing makes a kind of defensive sense. Here's where it stops making sense. $5,000 in debt, paid at the minimum, at a typical credit card rate of around 20% doesn't hold still. It compounds. A $35,000 balance at 20% with minimum payments only takes over 30 years to resolve and ends up costing more than $60,000 in interest along the way. Original poster's credit score is solid right now because they pay on time. Minimum payments on high, interest revolving debt means the balance is barely shrinking. And if new charges are still coming in monthly for things like that insurance premium, the balance may actually be growing. I'm not saying that to alarm anyone. I'm saying it because the backup plan of bankruptcy has real costs worth understanding before it becomes the actual plan. A Chapter 7 bankruptcy stays on a credit report for 10 years. A Chapter 13 stays for 7. It's not a clean reset. It's a legitimate legal tool, and sometimes it's genuinely the right move. But it should be a deliberate decision, not a default. A fee-only fiduciary financial advisor, the kind you can find through the XY Planning Network, charges by the hour and doesn't earn a commission on what they recommend. One session could map out exactly what the bankruptcy math looks like versus a debt management plan versus staying the current course. Just a friendly reminder, this episode is for entertainment and education only and should not be considered financial or legal advice. Talk with a qualified financial advisor about your specific situation. Now, the 401k, because I'd be leaving something important out if I skipped it. The original poster's worry that the dollar will be worthless by retirement is a real anxiety, and I'm not going to dismiss it. But here's the specific thing about a 401k when an employer offers a match. If the employer matches 3% of salary and the employee contributes at least 3%, that's 100% return on those dollars before a single investment is made. Instantly. No market needed. Skipping a match is leaving free money sitting on the table, and even someone who believes the economy is headed somewhere dark is better off with more resources than fewer. Broad market index fund or a target date fund inside a 401k also tends to hold up through inflationary periods better than cash sitting in a checking account. If inflation eventually eats the dollar, it eats uninvested savings at the same rate. Diversified assets have historically preserved purchasing power better in those scenarios than pure cash. I'm not predicting anything. History isn't a guarantee. But a 3% contribution, especially one that gets matched, is the one lever that pays off immediately regardless of what happens in 30 years. Bigger thing I want to name before the close is this. Burnout, the original poster is describing, is real. 50 to 60 hours a week. A $700 insurance bill going on a card every month. Making just enough to be cut off from the assistance that would actually help. Weight is not imaginary, and it is not a personal failing. Joneses, by the way, probably have $10,000 in credit card debt. People who look fine from the outside mostly aren't. But burnt out is different from defeated. I don't care anymore. Sometimes means I haven't found the path that's actually possible for me. That path might look nothing like the standard advice. Might be negotiating with an employer for remote work to get out of New York. It might be an ACA plan that cuts the insurance cost in half. It might be one conversation with a bankruptcy attorney that either confirms the fallback or reveals a better route. The goal isn't caring about debt for its own sake. Building enough breathing room that the choices stop feeling like they're being made for you. Specific question here was about $35,000 in debt, $700 a month in insurance charges, and whether any of it is worth caring about. But the principle underneath it applies whether you're carrying $3,000 or $300,000. Financial nihilism feels like relief because it removes the pressure. Over time, though, it usually makes the numbers harder, not easier. Small moves, even one at a time, compound differently than minimum payments on a balance going nowhere. It always starts with the first dollar. If you found this helpful, share it with someone dealing with the same thing. Until next time, stay profitable.